Hello students, you are welcome to a new week. This is our fourth week, and this week we'll continue with the topic which we've been doing since 3 weeks ago. For 3 weeks now, we'll be treating adjustments in profit and loss account. The first one we did bad debt and provision for bad debt. Last week we did prepayment and accruals. So this week we'll be treating discount and provision for depreciation. It is expected that by the end of the lesson, you, the student, should be able to define discount allowed, discount received. You should be able to define depreciation, list and explain the two types of discount, and then make entries into necessary books, the ledgers and final account. Now, I'll start by saying what is discount. Discount can be defined as a deduction from the usual cost of something. Usual cost of something. The cost of this pen was the cost of this pen is 200 naira, but because I'm a regular customer or because I'm paying in cash, the seller decided to sell to me at 180 naira. The deduction from the usual cost of something. Alright, let's continue. We have discount allowed, we have discount received. You can give out discount as a businessman, you can receive discount as a buyer. Now, discount allowed is a discount given to the customer. You are the giver, but discount received is the one you are getting. If you are buying from your supplier, this time around you are the receiver. So down there we have depreciation. Here we have depreciation. This can be defined as a reduction in the value of a fixed asset. Reduction in value. The value. You have a book. When you went to market and you bought a book. And then that book will be very, very fine, so neat. As you are using it, due to usage, as you're opening, closing, the book will be getting old. So this is what we say depreciation, reduction in value of that particular product. But this time around, we're talking about the reduction in value of a fixed asset in our business. So this you can have. So as a good businessman, you are supposed to provide for your depreciation. As you're making profit yearly, be bringing out money and be keeping aside so that you use it and replace that asset when it is too bad. Alright, we have two types of discount. We have the cash discount and trade discount. Cash discount to sell is a discount allowed of the invoice or catalog price for an item given by the manufacturer to the customer. Then we have trade discount. Trade discount is discount. There are discounts given for prompt payment. When you pay immediately, you will receive cash discount. So we have difference between cash and trade discount. Number one on the list, we have it is allowed to encourage the buyers of goods to make payment at an early date. Yes, for cash discount, these are the discount that businessmen or women give out so that their customers will learn to pay on time. They will tell you if you have to pay immediately, we're going to give you 2% off. If you're going to pay tomorrow, we're going to give you 1.5% or 5% off. Now this is discount to encourage you to pay early. But in trade discount, is allowed to encourage buyers to buy in large quantity. This is given when you buy in large quantity. It's given to everybody, to all customers. If you are going to buy 5 cartons, we'll sell at 4,800 naira, goods worth 5,000. So because they want you to buy in large quantity. Alright, the second one on the list is it is allowed by the seller or operator to buy at the time of making. It is allowed by the seller to the buyer at the time of making payments. When you are making payment, this is when you receive this particular discount. But in trade discount is not like that. Once the goods are sold to you, the discount is given to you, whether you are paying tomorrow or not. Alright, the third one is related to time. The earlier you make the payments, the more the cash discount, the more will the cash discount be come to you. But in trade discount is not like that. If you the larger quantity, the quantity of goods you purchase or you sell determines the amount of discount that we're giving to you. And number 4, we have cash discount is recorded in the books of accounts. Yes, the cash discount we record it in the books of accounts. Record it as discount received and discount allowed, the one you will see in our profit and loss account. But in the trade discount, it is not recorded in the books of account. Details are just shown in the purchases or the sales, all this, or the sales day book or purchases day book. We record it there for record purpose. Alright, number 5, we have this cash discount is not deducted from the invoice value of goods. it is given when you take your payment. Trade discount is deducted from the invoice value, the list price of your goods. Okay, these are the difference. Then let's move to the next one. There we have illustration. This illustration here is going to take us back to treating prepayment and accruals. We will still meet bad debt and provision for bad debt, and we'll equally provide for our depreciation today, and we'll equally treat discount allowed and discount received. Here in the illustration we have a man called Okolo, is a sole trader. This is the man's trial balance: stock, capital, motor vehicle, purchases, sales, provision for bad debt, debtors, drawings, creditors, freehold premises, and so on and so forth. Let's keep reading down. Down there we have wages and salary, transport, general expenses. We have advertisement. We have bank deposit. All right. Let's go to the question. Because the additional information. This is very, very important. That you are given the following additional information. The stock in hand on 31st December 1986 was 4,318 naira. Hot at or 31st, that means the closing stock. Insurance of 130 was outstanding. An employee took a salary advance of 110 naira. The provision for bad debt should be increased to 225 naira. Depreciation motor vehicle 450. Furniture and fittings 10% per annum. The question is solved. We are required to prepare trading profit and loss account for the year ended 31st December 1986. The balance sheet as at that date. Right, let's go to solving. Here, like I always tell you, the last assignment you people did, most of you, some of you omitted the name of the business, and at least this is very, very important. Who owns this business? The owner of this business is Okolo, and this is Okolo's name here. This is our debit, this is our credit sign. Those things are compulsory because they carry marks. Each of them will have their own mark. So this is the name of the account I'm preparing trading profit and loss account for the year ended 31st December 1986. Over here you can see my naira sign. I have my naira sign here. Now there you see opening stock. You add your purchases, add your carriage inwards, the money you pay to bring the goods to your shop. You less your return outwards. Those goods that you returned, you return them because you don't like them. You less them. After that, opening stock plus purchases plus carriage inwards minus returning outwards gives what we call cost of goods available. Then after that, you less your closing stock, the stock that are left in your shop at the end of the year. The figure is 4,318 naira. Remove it from the cost of goods available, you get what we call cost of goods sold. Now, for us to get this gross profit, we go back to the credit side. There you see our sales. We made sales of 46,003 naira, and then let's return in where some of our customers return the goods they bought from us. What 314 naira? We're going to remove it from the sales because they are no longer part of our sales. Just like return outwards was no longer part of our purchases. All right. And after that, our figure for sales, for net sales, which is the actual amount of sales, is 45,689 naira, and then we remove it from the total, the cost of goods sold, which is 35,062 naira, and it gives us 10,627 naira. You bring down the two totals and then rule your line to show that this is the end of an account, which is the trading account. Move over to the second one, which is the profit and loss account. Now we are not going to write a new heading for it because you've already written it here, but now you have to indicate this. I just indicated by writing my expenses and underlining it. Looking at it, you know where my profit and loss account started. All right, on this debit side of profit and loss account, you start listing all your expenses like we said the last time: insurance, salesman salary. Now our insurance, I want us to go back to our insurance. What did insurance say in the question? In the question, the insurance given was insurance they gave to us was 711 naira. Then how come I'm having 841 naira? Let's go to the additional information. It will help us to understand. Additional information said insurance of 430 was outstanding. So what I did was I added up the insurance and then the outstanding, and then it gave me the figure that you're seeing here, 841 naira. Salesman salary was given to us as 1,228 naira. Wages and salary. Wages and salary was not this figure, but remember that an employee took a salary advance of 110 naira. So you have to remove it from the wages and salary to get this 1,491 naira. Our transport, general expenses, office salary rate, advertisement, provision for bad debt. Provision for bad debt, the figure was 81 naira. But the additional information said we should increase provision for bad debt to 220 naira. That means add something to it. Add something to 81 naira to make it 225 naira. So what we did was 225 naira minus the 81 naira that was given us in the question, and then it gave us well, provision about 144 naira. All right, let's move to the next one. We have depreciation. 10% for furniture and fitting. The furniture and fitting is 1,000 naira. 10% of 1,000 naira is 100 naira. Motor vehicle was given us for 450. Discount allowed 342. Discount allowed is an expenses. We have to do it as one. You gave it to your customer, the expenses to the business. So let's go to the other side of this account, which is the credit side. On the credit side of profit and loss, you start listing all your income, all your revenues, the money that came to the business. Gross profit, yes, is the profit to the business. So from the trading account, we made gross profit of 10,627 naira. Discount, we receive discount as well, just like we give out, so we only receive 509 naira. And then interest were given to us by the bank, 637 naira. Add them together, we have a figure of 11,773 naira. Now add up your expenses, remove your expenses from 11,773 naira, you'll be left with 1,414 naira. You bring down the total of this figure, that 1,414 naira, my dear, it is going to be called net profit. This is actual profit of this business. I will always remind you of this. The gross profit of a business is not the actual profit of a business, because you've not removed all your expenses. So you don't say that it is the actual profit. The actual profit here is your net profit, which is 1,414 naira. You have removed all your expenses. You are taking care of all your adjustments, taking care of all your depreciation, and then this is actual profit of a business. Okay, down here I have my workings, how I got my insurance, how I got my wages and salaries, how I got my provision for bad debt, how I did my depreciation. And after that, the question said I should equally solve my balance sheet. That is what I'm going to do here. If you look up here, you see my debit, you see my credit. This is the heading, balance sheet as of 31st December 1986. As of 31st, no longer for the year ending, as of 31st December 1986. Okay, on my debit side, I have my capital 22,000. I have my net profit, the profit I made from the profit and loss account, which is actual profit of my business, 1,414 naira. You less your drawings, the money that was taken by this man, Bukolo. The man used it to take care of his personal needs. Those we call those things drawings. So we less it 1,005. We got 21,914 naira. Under it, we start listing all our current liabilities. Our creditors, we are owing people 5,700 naira. The insurance, we are owing insurance people 130 naira. Now let's go back to the credit side. We start listing all our fixed assets first. Freehold premises 8,250. Furnitures and fittings 1,000 naira, but we have to remove 100 naira for our depreciation, according to what the question said we should do. So this is 1,000 minus 100 naira gave us the 900. So motor vehicle was 3,000 naira. We remove our depreciation, which is 450 naira. We have 2,550 naira. Now coming down here, we have our current assets. Under current assets, those assets that will not last for more than 12 months. We have cash. We have debtors. Our debtors, we are going to remove less our provision, the money we provided for those debtors, 225 naira. We have bank, we have stock, we have prepaid, salary. Then you add the two sides together. Please always remember this: the two sides of your balance sheet must be equal. If the two sides of your balance sheet is not equal, please go back and check your questions very well. Check your solvings and make sure your calculations are accurate. All right. This is the end of the lesson, and I'll plead with us to please make sure you do your assignments before the cutoff date, because all these assignments that we are doing, they are being compiled. They will be compiled for by the end of the term, and then all of them will appear in our result. So please be serious with them. Thank you very much.